All right, welcome to the Explainer. Today, we are diving deep into the language of the market. This is a skill that, honestly, something like 95% of investors never really get a handle on. And believe me, it's costing them. Big time. So let's just kick things off with a number that should really make you sit up and listen. $1.2 trillion. That is the estimated amount of money retail investors lost in just a single year. And the crazy part, it wasn't because they were picking terrible companies. It's because they simply could not read what the market was screaming at them in real time. And here's the real problem, right? Most investors these days are just drowning in data. You've got news, you've got reports, you've got social media, and yet they're basically illiterate in the one language that actually moves the money: price action. A stock chart isn't just some squiggly line. It's the real, unfolding story of fear, greed, and conviction, all written in dollars and cents. Okay, so let's get into it. To really understand what you're looking at, you have to stop seeing a chart as just a graph. Instead, think of it like a live transcript of this huge, ongoing negotiation between millions of buyers and sellers. Every single point on that chart, that's a deal that was just made. The very first big mental shift you have to make is moving from thinking about price lines to seeing price zones. You see, a beginner looks at a chart and sees a number, like a stock is at $50. A pro sees a battleground. They see a zone where huge decisions were made, and all the psychological pain of people who bought too high, or the joy of people who sold at the top, gets embedded right into the chart's memory. Now, what's so cool about this is that support and resistance, they aren't some kind of magic. They're just logical areas of supply and demand. Think about it. If a stock tried and failed for weeks to break above $50, that $50 level is now burned into the memory of everyone who is watching it. So when the price gets back there, people react. That's not magic. That's pure market psychology at work. Okay, so let's take that idea and build on it. Because if the price tells you what happened, the volume tells you the conviction behind the move. It is, and I love this phrase, the market's truth serum. A price move on low volume is like a big statement with absolutely no confidence behind it. So this is absolutely crucial. In any healthy, sustainable trend, a rising price must be accompanied by rising volume. That's your confirmation that serious money, institutional capital is backing the move. If you see the price creeping up, but the volume is drying up, that is a massive warning sign that the rally's running out of gas. You can just see the story playing out here, right? A breakout to new highs on massive volume? That's the big money screaming, yes, we believe in this new price. Or how about a huge spike in volume at the very end of a long, painful downtrend? That's often the final moment of panic, the get me out at any price selling, right before the smart money quietly steps in to buy. Now this is where so many new investors just get completely off track. They start cluttering up their charts with dozens of flashy indicators, thinking they're going to find some kind of crystal ball that'll predict the future. But that is not what indicators do, not even close. The answer to that is a hard no. Every single technical indicator, without exception, is just a mathematical formula based on past price and volume. I mean, think about it. They're made from old data. They are, by their very definition, backward-looking. They can't tell you the future, they can just help you see what's already happened in a slightly different way. Let's just take a super common one, the RSI. A total beginner sees the RSI go above 70, they read overbought, and they panic sell, often right before the stock makes its biggest move up. A professional, on the other hand, looks for divergence. If the stock's price hits a brand new high, but the RSI indicator makes a lower high, that's a powerful clue that the momentum driving that price is starting to fade. So really, the big takeaway here is to just embrace a less is more mindset. Seriously, most professional traders I know use maybe 2 to 4 indicators, tops, and they use them to confirm what they're already seeing in the raw price and volume. They don't use them to generate the ideas themselves. Okay, so how do we actually pull all of this together? How do we take these concepts, these price zones, the volume, the indicators, and turn them into a practical, repeatable process you can use on any chart to make smart, logical decisions? Well, here it is, a simple 4-step framework. First, you zoom out. Get the big picture. Are you in a bull market or a bear market? Second, you mark your key battlegrounds, those support and resistance zones. Third, you check the volume to see who has conviction. And fourth, and this is by far the most important, you define your risk before you put a single dollar on the line. If you can't tell me exactly where you'll get out if you're wrong, you don't have a trade, you have a gamble. All right, let's bring this all home with what is probably the single most important mindset shift you have to make to actually succeed with this stuff. This isn't about being right, it's about having an edge.
Look, the whole point of reading a chart isn't to predict the future with 100% certainty. That's a fantasy. It's impossible. Even the most perfect textbook chart setups are still going to fail 30, maybe even 40% of the time. And you have to be okay with that. The real goal is just to consistently stack the odds in your favor. By using a framework like this, you're not trying to win every single hand you play. You're trying to play a game where, over hundreds of trades, your winning decisions are bigger and more frequent than your losing ones. That right there is the only sustainable edge that matters. So I guess I'll just leave you with this thought. In a market where the vast majority of people are basically flying blind, just reacting to news headlines and their own emotions, learning how to read this map, the simple language of price and volume, is your single greatest advantage.